All right, today we're talking about, is the stock market actually overvalued? We hit on this topic a little bit yesterday with the Warren Buffett video, and he certainly seems to think so. The god of investing, the Oracle of Omaha. Berkshire Hathaway and Warren Buffett are sitting on a pile of cash worth more than 75% of the world's country's GDPs. We appear to be in the extremely overvalued danger zone, sell right now area in just about every chart I can find online. So we're gonna break this question down and simplify it because I think there's a lot of misconceptions out there. And I think the answer is going to surprise you. There's certainly a lot more than meets the eye, so let's get right into it. There's this constant overhanging drag of YouTube and lamestream media that pounds us with the term overvalued. Overvalued this, overvalued that, expensive. And as we just saw, these charts clearly show us in that danger zone. But we need some context here. There's something missing that's really easy to overlook. First, we need to start with the absolute basics. We're going back to square one. What does the term overvalued actually mean? At this point, we throw it around like a hot potato, right? But I think we're losing sight of what this term actually entails. The prefix of overvalued, over in this case, is a relative term. Value is an absolute term. And with that being said, when we use this term over or under as a prefix in the context of overvalued or undervalued, we need context as to what we are actually comparing against. To be over or under something, you need some frame of reference, right? Saying that on its own is absolutely useless. And I'll give you a good example of this. Meet our friend John here. He's an IT staff at a US company making just about $100,000 per year. Sounds pretty good, right? He's considered overpaid compared to Arman. Arman is also an IT staff working the same exact position, but is out of India making about $50,000 per year. Yes, John is being paid more than Arman is, but that doesn't make him overpaid. Why? Well, we need context. As we just talked about the term overvalued or undervalued, we are comparing to something else. John is making more money than Arman is, but he's certainly not overpaid. The detail I left out is John is working out of New York City, one of the most expensive places to live in the entire world, costing an individual to live comfortably about $70,000 per year, about 7/10 of John's paycheck. Whereas Arman's living quite comfortably actually in one of India's biggest cities. He's able to live comfortably for about 12,000 US dollars per year. So just over 30% of his annual income. I think you can begin to see where we're going with this. We are missing context when we look at the price of the stock market, when we look at PE ratios, when we look at any financial metric. What unit are we measuring in? Well, this is probably a spoiler, but this is the dollar index chart. Just think the US dollar compared to a basket of other currencies. As you can see here, the US dollar has been pretty much in straight free fall mode since the beginning of 2025. In fact, it is actually the worst start to the year for the US dollar since 1973. 1973, the year we left the gold standard. So why does this matter? Why are we talking about the dollar index? Why are we comparing salaries in New York City and India? Here's where that relative context really comes into play. You can see here now, we have three lines on this graph. This is the US stock market priced in 1, USD, US dollar, 2, the euro, and 3, the British pound. Notice anything here? Look at this gap right here. The gap between the US stock market in USD and the US stock market in the euro. There's a massive gap here. In fact, one's actually heading in the other direction. That's good, we're getting somewhere. This right here is also the Mag 7. So think your Apple, Microsoft, Amazon, Alphabet, Meta, Nvidia, Tesla. Also, the same thing is going on. Moving down, moving up at all-time highs. So what's going on here? Well, it's so easy to lose sight of these little details because we're just so accustomed to reading US stock market. That US stock market chart is actually the US stock market priced in USD. And when we price the stock market in these different currencies, you can begin to get a feel for some of the underlying dynamics that may be impacting the price of stocks more than you may have anticipated. And understand this, we just priced the US stock market in other currencies, the euro, the pound. Well, we can price the US stock market in gold if we wanted to, and this gives us some even cooler takeaways. For example, in the dot-com bust that took place in the late 90s, early 2000s, we were in the midst of this absolute downfall, this bloodbath of expensive internet and tech companies with no earnings. And obviously, evidence of the stock market being overpriced was apparent, but look at even more so in terms of gold. And after the dot-com era, gold skyrocketed as people began to lose faith in just how much of a return they could get in the stock market going forward. And as we move up a little bit more here, you can see in 2008, the Great Financial Crisis. This is where the great debasement of our currency, fiat from gold, really started to accelerate. And now looking at US dollar price charts compared to gold, is too far detached to be valuable, but this dynamic during the dot-com bust is quite interesting. And now it's starting to make sense, right? We looked at the US stock market, the S&P 500, valued in these different currencies. The one valued in US dollars, the one that most people refer to, is outperforming the others quite drastically. And so why is that? We talked about how we need a frame of reference to make this term over or undervalued valuable. If not, throwing around this term is completely useless. And so most of the posts that you see on YouTube, social media, not considering these other dynamics are missing some serious context. As we saw, the US dollar is absolutely collapsing. What does that mean? If you have a big number, let's say it's a stock that's trading at $30 per share, and that's priced in USD, if the price of USD continues to fall, so let's say we go from 10, and this number continues to decrease, then this overall number, the result of this division, gets larger. This would be 3. And if the dollar drops by 50%, again, this is just an example, so bear with me here. I understand that's absurd. But the currency in which we're comparing this stock value to, well, that stock just doubled. So yes, the stock market is at all-time highs priced in USD, and that's in large part due to great earnings by some big tech companies, innovation, again, by tech companies and others, but also the dollar sinking, falling. And this trend certainly isn't going away. As we can clearly see, the purchasing power of the USD, along with any fiat currency, the second that we get away or debase from anything with intrinsic value and rely on fiat or paper money, your purchasing power will decrease with time. This dynamic has been repeated throughout empires and history, throughout decades and decades of fiat currencies. Inflation is a natural process that occurs in all economies and all currencies across the world. But to circle back to our all-encompassing, our overall question we asked at the beginning of the video, is the stock market over or undervalued right now? I did some digging and got some data to actually calculate the Buffett indicator, the chart that we saw at the beginning of the video and in my last video. And clearly we saw what overvalued state we were in. Well, as you can see here, this extreme overvalued range is really anywhere above, it looks like 170% to 200% and above that. But when we look at the Buffett indicator, using the total value of the US stock market in these different currencies, it's clear that yes, in terms of USD, the stock market is in that extreme overvalued region. But in euros, in pounds, we are much more fairly valued. Now, am I insinuating that the stock market is definitely fairly valued based on Warren Buffett's indicator? Absolutely not. This could be absolutely useless. As we talked about in the Buffett video, he himself has said valuations on their own are useless. Kind of the point that we're making this video, right? You need context. You need to understand the business. You need to understand the product. You need to understand the competitive moat that that business has within their industry and across industries to make a fair judgment if something is over or undervalued. You need to consider the dynamics of the currency in which the value of that investment is priced in. As we just saw, the US dollar simply dropping 10%, that artificially pushes a stock priced in USD upwards. And just one final chart, I swear this time, I know we've looked at a lot of charts, but I think this really drives the point home. When we look at the S&P 500, and again, this is only going back to 2021, but when we view the stock market priced in USD and the stock market adjusted for the M1 cash supply, the amount of money circulating in the economy, we can clearly see this is a much much different story. But again, you can't take any of these things in isolation, in a vacuum. There's so many considerations that need to be made, including what the asset you're trading or investing in, what is it priced in? It's something easy to overlook, but clearly has some significant impact. So I hope this helps shed some light on just why this term overvalued or undervalued is a dangerous term to use, because frankly, there are about 1 million different things we could compare value to try and reach some concrete solution or reasoning. But at the end of the day, no indicator is perfect, and it's just important to realize that these dynamics exist and be aware that they can change rapidly. I hope this helped, because I was getting sick of seeing all the undervalued headlines. Just do your own research and be aware that these dynamics exist. I'll see you in the next one. Peace.